What's going on, guys, and welcome back to my YouTube channel. In today's video, I'm going to be breaking down a really simple entry model that you can use when trading on the lower time frames. And as always, make sure you subscribe to the channel so you don't miss any more content. And if you want to join my VIP trading group where I send in all my trades and go live every single week, just click the link in the description below. I hope you enjoy the video. Let's get straight into it. So before we jump onto the charts, I just wanted to show you and keep you guys updated with my progress with these funded accounts. If you've been watching all of my previous videos, you can see that I give an update on where I currently am, the withdrawals I've made, etc, etc. So if you watched my last video, you would have known that I was waiting for a payout from Funded Next, and it's a week later. I've now received the payout. The payout was $15,800, which is really good. My experience with Funded Next has been great. One thing I really love about Funded Next, and this is just me being completely honest, they have this bonus that if you pass phase 1 and phase 2, when you get the payout, if you make over 5%, you also get 15% of your phase 1 and phase 2 profits. So you can see it here. Number 2, you will be able to withdraw the 15% profit share of the evaluation or seller challenge phases once you make 5% growth in your Funded Next account. So you can see this is a 200K account. I made over 5%. That was the actual profit that I made on the trading account. But then you can see these two down here, that's 15% of phase 2, and this is 15% of phase 1. That's why that is added together to make the 15,000. All these other ones you see, this is because of the other challenges I have. I've also passed another 200K. I've got 50K on the way. So this is obviously just yet to be approved. But yeah, really good stuff. They have a 24-hour payout promise. So when it's your payout day, it comes in 24 hours. They lived up to this, their expectation. They did actually pay me within 24 hours. And if they don't pay you within 24 hours, they actually give you $1,000 bonus. So to be honest, I wouldn't have minded if they did take a little bit longer than 24 hours, but it is what it is. Multiple different ways you can get paid out: bank transfer, Rise, Wise, Tether, and other ways. So yeah, really good. Their challenges are reasonable. I would say they're up there as like top 5 players right now in the prop firm space at this current stage of filming this video. Obviously, who knows what's going to happen in the future. They might be number 1, they might disappear, but right now this is my honest review of Funded Next. They've paid me out. Their trading conditions were good. The customer service was great. The payout time, the challenges weren't too expensive. And so I'm happy, and I'm just giving you guys my my view. So my 200K account here, as you can see, is back to the profit's been taken out. So it's back to being a fresh account. Still haven't traded on this challenge account. I also have another 200K live account, which is being merged into that 200K account tomorrow. So maybe on the next video I'll update you with that. But yeah, they do a lot of things, which is great. So yeah, that's the review on Funded Next. Really good. And hopefully I'll get another payout from them and I'll update you next week. But anyway, let's go onto the charts and I'll show you this entry model that you can use when trading. So here we are on USD CAD on the 5-minute time frame. So this entry model is going to be on the 5-minute time frame, and you also implement the 1-minute time frame as well. Okay, so start off with some simple analysis. Okay, really simple stuff going on. Price has clearly broken through recent market structure here with a strong impulsive move to the upside. Okay, and all we're doing right now is we're seeing for price to pull back, to retest this level of resistance as an area of support, which it has done. But I get asked all the time, well, what am I actually looking for my entry? Where am I putting my stop loss? And this is actually the key when it comes to my trading, okay? Because for those of you who know me and know how I trade and are inside my group and you're watching this, you know that I go for big risk to reward ratios. And the reason for that is because when I'm right, I want to be right big. Like when I'm right, I really want to be right. So I want to maximize on that win as much as possible. And I feel like as people and humans coming into trading, it's a very natural thing to not want to lose. It's very normal to want to increase your win rate and to increase your stop loss size so you don't get stopped out. Because as humans, right, it's a natural thing to not want to lose. But I'll be honest with you guys, this is probably the only industry where you can lose a lot and still be a successful trader. Trust me. So that really changed for me. My success in trading really changed when I had that mindset of, rather than trying to avoid losing, I was actually embracing my losses and instead just maximizing on my wins. When I do win, I want them to be big. Okay. So that's what this is going to be about. So let's get into it. So we can see that price is pulling back to this level of previous resistance as support. Now, where are we going to enter the market? So the first things first, I want to see a switch in momentum. I want to clearly see that buyers are taking control of the market. And let me just zoom in here for you guys so we can get a clear understanding of where that might be. So there's 3 places where that might be. And this is the 5-minute time frame. It could have started here. Okay, because we have to be honest with ourselves. We can see that buyers are trying to step in the market there. It could have been here. And then obviously the last one, it could be here. Now, why wasn't it the first 2? And it literally comes down to the candlesticks, okay? We can see that there's no control from buyers. Buyers have never taken control of the previous candle. Every candle that we're seeing is still bearish. Why? Because it has failed to engulf the previous candle. Look at this candlestick here. It hasn't engulfed this wick. This candlestick here hasn't even engulfed this previous candle. It's left a huge wick rejection to the upside, which is showing sellers' dominance. This one down here, okay, yes, we have 2 quite big bullish candles. However, each candle has failed to engulf and take over the previous candle. Okay, it's failed to do so. Until here, price has pulled back to this level. Okay, we're showing a slowdown in momentum. These two doji candlesticks, small bodied candlesticks, show indecision within the market. Okay, it shows us that it's a turning point right now and a decision is being made. And then that decision follows with the next candle, which is this candle here, this bullish engulfing candle, okay? So this is clearly showing us that buyers have now taken control. We've completely wiped out the previous candles. This is a good indication for us to look for buy positions. However, when I first started trading, I would look to enter off that candle. However, this video isn't about that. We're now trying to find a precise entry. Okay, so what I mean by that is normally huge bullish candle, I would look to enter the market there, put my stops, let's say below the low, and then let's say my target for this one is around, let's say this level here, like a 1 to 4.5. Okay, nice risk to reward ratio is what most of you are going to be thinking, but like I said, I'm looking to maximize on my profits as much as possible. When you're entering the market, and think about this, every time you've seen this huge bullish candle, it's very rare that price just continues moving in that direction. And you can see it all over the charts. For example, huge bullish candle, you then get a movement to the downside. Huge bearish candle, you then get some kind of pullback. And that's what tends to happen. Just because you've seen this huge candle doesn't mean price is just going to continue going. What I've noticed is whenever price pushes so far and so impulsively, you tend to get some kind of correction. And this is where we're going to now jump onto the lower time frame, the 1 minute time frame, to catch our specific entry. So we're going to go down to the 1 minute time frame now. And this is where we get a little bit more in depth of what is going on. So this is the pullback. What can we first notice? We can notice that price is technically downtrending, okay? We're seeing price forming these lower lows followed by lower highs, okay? Price is technically moving to the downside, which is why we got in, or are looking to get in at the best time, because we can see that this is our most recent lower high, and this move that we've had to the upside has now broken through that market structure. Okay, so with that being said, how are we going to look to catch our entry? So we already want to be in the market, okay? That's a given. We want to be in this market now, okay? We really want to be in it because price has broken structure. On this 1 minute time frame, we've broken through this high point. But like I said, I want to be maximizing on my positions as much as possible. And I understand that price forms structure. Every time we have an impulsive move to the upside, I'm expecting price to pull back, to retest this level as a support. Okay, I'm expecting price to pull back into there before we make that move up. So what am I doing? I'm going to be patient. Notice, okay, the risk to reward ratio here is a 1 to 4.6. Notice what happens if I just be patient and I wait for price to come down to this low point here. My risk to reward basically doubles from a 1 to 4 to a 1.8 by just waiting for a small retracement in the market. It might even end up coming a little bit further down, and I might even catch an even better entry. But regardless, let's play out price and see what happens. Okay, notice price comes back and retests that zone. I'm now in the market, okay? I've already wanted to be in the market here, so I'm not waiting for a bullish candle or anything like that. This is just me being patient and letting price come down further so I can get a better entry and I can increase my risk to reward ratio. So when price was here, I already wanted to be in it, but I didn't want to be in the market with that big of a stop loss. So what do? I wait for price to pull back, I enter the market at a better price, and then we continue. And then let's just play out price and see what happens from here. So for those of you that know how I trade, I always look for scaling positions. I always look to jump into the market again. So we can jump back up to the 5 minute time frame. Okay, we can clearly see that price is bullish right now, okay? Strong bullish candles engulfing, price is definitely moving to the upside. So I don't need to be on the 5 minute time frame. I'm back on the 1 minute time frame, and all I'm focusing on here is the market structure, okay? Because we can clearly see now price has broken out of this. We're retesting key levels. So now I want to know, how can I get in the market again? For example, is price going to potentially pull back to this level? Let's take a look. Could look to enter the market potentially there. That would have been a great entry. Price down here, look to enter the market. Why would I look to enter the market there? When you can see how we have the slowdown in momentum of these candlestick patterns here. Small bodied candlesticks, price pulls back. Then we have the small bodied candlesticks. What is that? That's indecision. That's a decision being made within the market about what's to happen next. Price comes down, and then the decision is made once the next candle completely engulfs the others. Put my stops below the low point. This first trade, I probably would have moved my stops to break even to protect the capital. And then I'd have 2 trades running. I'd have now both targeting up here. So this 1 to 8 plus a 1 to 7 is now increased my risk to reward ratio massively. And then we'll continue playing out price and see what happens. I'm sure we just continue going up. Okay, yeah, so it will have hit our target anyway. So yeah, guys, that's just a really, really simple entry strategy that I use when trading. This isn't the only one. I'll break down some more in other videos, but this is just a really, really simple one that you can use on the 5 minute. It's simply just being more patient and waiting for price to show evidence that we are continuing with the direction that we want. And that is coming from waiting for price to pull back to a key level, waiting for the indecision, so a slowdown in momentum, then waiting for a decision to be made. And that decision is from the bullish engulfing candle that completely engulfs price. And then from there, you're not just entering off of that bullish candle, you're then being patient because you want to get a better entry. You're jumping down to the 1 minute time frame, seeing where can price pull back to. In this instance, we pulled back to retest this level. And then not only are you then entering that position at a better price, you're then allowing price to develop, form these higher highs followed by higher lows, looking for the exact same thing again, and then trying to maximize on the position as price is moving to the upside as much as possible. But anyway, guys, that's it. That's the entry model. I hope that was helpful. Make sure you leave a like and a comment. Let me know your thoughts on the video. Let me know what type of content you want to see. But apart from that, guys, I hope you have a great week and I will see you in the next video.